Okay, we are live. And I'm Anton Stetner, and I am a real estate broker. I've been doing this since 2003. We've sold thousands of homes here in the Seattle Metro, and I love talking about numbers and stats. And so, what we're going to do today is we're going to go through the market. As always, feel free to drop your questions into the chat. And if for some reason you watch this on a replay, just drop your questions into the comments. Happy to come through and answer them. Couple things that we need to talk about just to kind of set the stage here is the market right now is good, but it's not like great and killing it. Number one. Number two, tariffs scare the market. And when I say scare the market, tariffs add a level of uncertainty. They add this unknown factor in the background. Like, is it going to cause inflation to rise? Is it going to make inflation go down? What's going to happen there? And you're seeing that inside of the 10-year Treasury. If you look at the 10-year Treasury today, what you can see there is you can see with the 10-year Treasury today that, oh my goodness. So we were trending in this beautiful downward direction, just trending down. And then this right here is rates basically hitting 6.5. And then all of a sudden it just goes straight up when we hit Liberation Day. And when the tariffs start to come through, right here, what you were seeing is, oh, things are getting normal, but then it kind of spiked up again because we're still talking about tariffs. Having tariffs as part of this conversation is causing the bond market to get a little topsy-turvy, get a little bit pissed off. So rates today are probably right around 7 when they were just at 6.5. As rates hit the mid sixes, the market picks up. As rates get above that, the market starts cooling down. So we may see some cooling effect if these rates don't get under control. Conversely, overall, the 10-year is still trending down. I mean, even though it's not as pretty as it was, if we look at this 6 months, this is January. So we're still below where we started. It's still trending down for the year. But we needed to trend down more than that for debt to get cheaper for us in real estate. Basically, when you look at the 10-year Treasury, you can take that number right there, the 4.48, and you can add 2.6 to it, which is the spread today, which is usually about 1.8, and that's your 30-year fixed debt. Okay, so got that out of the way. Having said that, I was asked this morning by another developer friend. We just had a meeting. We looked at his townhome project. We were talking about it. He said, "What is your feeling today?" Here's my feeling. I want to make this very clear. I am a little bit short-term bearish and I am long-term bullish. And I'm short-term bearish because the tariffs are still an unknown factor. I am personally anti-tariff just because they do prove to be inflationary, and I want to get inflation under control, and I want debt to get cheaper. I do believe and love the idea that that helps the American economy and bringing manufacturing home. All that stuff's good. But just for our short term, and because we're talking about real estate, tariffs are bad in relation to real estate because it creates inflationary pressure, which is, of course, right now lifting the 10-year Treasury, which makes our debt more expensive. Now let's go in and actually look at some of these stats here. We're going to start in King County, and this is basically the median price over the last 3 years. And we know the market peaked in 2022, and we're not quite back to its peak, yet. Okay, it barely beat it right there in May, and then right now we're still below its peak. So March of 2025, the median price in King County was $855,000, up 1.2%. Up 1.2% month on month. Let's look at the average real quick. Average is basically 1.1. and it's up 1.3% month on month. We'll look at some year-to-date numbers for King County here in just a second. New listings up 24% when you compare March of last year to the previous March. Homes for sale up 50%. So it's interesting because they talk about this idea that, and you're hearing this in the media, like rising inventory is going to cause prices to drop. Rising inventory here in the Seattle Metro has not caused that, number one. Number two, it's not going to cause it because our available inventory is still so much lower. And you can see that over here in the month supply of pending. The month supply of pending, you're sitting at about 2.2 months right now. You get to a low, of course, always at the end of the year. It peaked out in September of last year at 2.9. It peaked out in 2023 in September at 2.3. When you're looking below 5 months, you're in a holy cow, you're in a seller's market, and then above 5 months, you're really starting to get into a buyer's market. At 2.3, of course, it is a strong seller's market. But one of the things that's always good to just kind of give us a little history, a little perspective here, is that when we start really diving into the inventory, during the Great Financial Crisis, King County got as high as 11 months worth of inventory. That's when prices were dropping. That's when supply was exceeding demand. And then the market bottomed basically in 2012, and you see inventory start to drop. And then inventory is basically sitting below 4 months for the last decade. The whole last decade, it's been sitting below 4 months. So we've been in a strong seller's market. So don't let this national news come in and fool you when they say inventory is rising. When inventory comes from a really low level and it rises, they'll be like, inventory is up 40%. But you've got to look at it. What does that mean? Anytime someone tells you data, dig behind the data. Try to figure out, what do they mean? Where are they saying this? And then also, why are they telling me this? The media, people in social media, they are selling something. We're just going through the raw facts and the data together. If you guys have questions, once again, drop it in the chat, drop it in the comments if you're watching this on the replay. Let's go over and look at days on market. That's a lot. So let's go back to the last 3 years. Let's look at the average. So the average days on market is really 28 days. That's a month to sell a home. Month supply of pending, we kind of already talked about that, 2.2. I like this one, the percent of original list price. The percent of original list price, this is when you can see literally the bidding wars happen. When someone asks you, like, when is the best time? Like, when's the best time to buy a home? When can I get the best deal? That data is right here in the percent of original list price. It shows you right there when the best deals are happening. And the best deals are happening, look at that, January 2023, 94%. That means the average person was getting almost 6% off. December 2023, 96.4%. So in other words, you're getting about 4% off. This winter, you got about 3% off during December and January. As you see this number start to rise and you see it get above 98, 98 is kind of the long-term historical average. That's bidding wars starting to happen. So the bidding wars are already happening right now on stuff that's priced correctly. It's near the median, or it's just like a one of one. You know, it's a phenomenal location, best school districts, things of that nature. Now let's go look at Snohomish County real quick. Okay. Remove that. Snohomish County, take me off the screen. So same thing applies in Snohomish County. You can see the median price peaked out in 2022, right before the Fed raised interest rates at about $775,000. This last year, we peaked out at about $750. Right now, we're $735, up 3.4% when you compare March of 25 to March of 24. Okay, let's look at the average. Average peaked out at basically 850. Um, in June of 2024, we hit basically 830,000. We're at about 800,000 right now, 3.5% over where we were last March. New listings, what's happening? Same story. Okay, listing inventory is rising. This is one of those times of the year, though. This is the natural rise in the market. Always remember that. What's happening with homes for sale? Homes for sale is up 52%. Okay, so homes for sale is rising. Pending sales up 4.6%. Closed sales up 3.8%. One of the things, that I've been getting asked by a lot of my fellow real estate agents, I guess we're called brokers now, the fellow real estate brokers here in Washington State in the Seattle Metro is, what do we think is going to happen this year? I think we're going to sell 5% more homes this year in 2025 than we did in 2024. And if rates trend down, so if that 10-year treasury starts to trend down, we could sell 10% more. So we're at that point, that inflection point, just like we were in 2012, where you're going to start to get a natural rise out of the market as rates stay lower and as the margin compresses out of rates. That's the difference between the 10-year and what a bank charges you. So like I said before, that's usually 1.8. Right now it's 2.5. But if that margin compressed, you'd be in the low sixes already today. So if we get some Fed funds rate cuts, we get our tariff talk under control, and inflation keeps trending well, like the CPI report, basically core inflation and CPI both came in slightly lower. So it was great. Everything's headed in the right direction. The turbulence right now is all around the tariff. Let's look at days on market. Days on market, about 30 days in Snohomish County. Month supply of pending, 1.6. This is kind of interesting. And the reason I say that is King County has more inventory than Snohomish County. And I was thinking about this, and we were kind of chatting about this in one of our investor classes we did in the last week. I think it's because Snohomish County is more affordable. So you're seeing a slightly higher level of inventory in King County versus the more affordable area. Snohomish County is getting bought up or purchased more, thus creating less inventory. Let's look at the percent of original list price. Percent of original list price, you see it, same pattern right there. The deals are in the winter. We're already up to 99.2. Shows depending, okay? The average property is taking 12 showings, and the average property is getting 6 showings. So one of the things to be thinking about is if you've got a listing and you're listing, and you can go in if you're a real estate broker and grind this down into the zip code or the area. But if you're getting 6 showings and the data says that you need 12 to sell, well, then it's price, condition, or positioning inside of the market. You have to be able to hit these numbers in order to get the results of the market. So if you're not getting enough activity, you have to slow down and ask why. Add this back to the stage. Okay, let's just take, so this is the same data, but it allows us to look at it on a year-to-date basis for King County. And then the data, instead of being monthly like we just looked at, this is a rolling 12. A rolling 12 smooths the data out more. It's less volatile on a monthly basis. But King County, what you need to see is this right here. The median price year to date, so that's January, February, and March, when we compare it, is up 1.4%. And then, of course, we've right here got the average price is up 2.1%. Percent of original list price, about the same bidding wars as we were seeing last year, but you're seeing the new listings rise, you're seeing pendings rise, and days on market is about the same. Let's look at Snohomish County. Snohomish County. So look at this. And once again, I believe this is a function of affordability. You can see that this median price is up 4.7% year to date, and its average price is up 5%. Most likely that is just a function of affordability. Homes are cheaper in Snohomish County. Oh, got to make it bigger than that so it's easier to read. Let's look at Pierce real quick. Pierce County, days on market. That's kind of significant. I mean, that's a 16% increase. That's basically 45 days there. With a little bit new listings up, pendings up quite significantly though, and then the median price up 3.7, the average sales price up 6.2. If you guys have questions about this specifically, feel free, once again, drop it in the chat. If you want to know something or you want me to dig into a listing or you want me to dig into a specific zip code, let's go look at Skagit County real quick. I want to see that. I'm just curious what's happening in Skagit. Let's look at the Skagit report. Okay, we got to make that thing bigger. So Skagit, once again, same thing. You're seeing the new listings rise. You're seeing pending sales up quite significantly year to date. Closed sales up actually also quite significantly. Median sales price up 8.6%. Once again, very significant. So Skagit, this is probably another example of affordability, showing up. Low supply, 1.7 months worth of supply there in Skagit. Let's go through and let's also just take a look. I'm just going to go Whatcom, and then we'll hit Thurston too. Whatcom. So Whatcom County is basically flat. So new listings up 30%. I mean, that's quite a bit of competition starting to hit the market there. Pendings, 6%. But median sales price down 3%, and average about flat. So when you see median sales price down about 3% like that, that could be there were some expensive homes that sold last year inexpensive homes that sold last year that are bringing it down. Because always remember, the median is the middle and the average is the total added together divided by the number of data points that you're looking at. Let's go look at Thurston County real quick. Thurston, let's view that report. So Thurston County that's really mirroring kind of what you saw also in Pierce. You've got your new listings year to date up, basically 7%, pendings up 2%. Closed sales down slightly though, kind of interesting. But your median price and your average price are both up over 5%. One thing to be thinking about is if you're looking in Thurston or you got an investment deal, like I'll probably need to chat with Cody about this. 6% in the first 3 months is a lot of appreciation. That's really rapid. So Thurston County is definitely growing quickly right now in price as we're looking at it. There's one other thing I wanted to look at with you guys. I want to look at just the whole MLS. Go back. So the entire MLS, when you look at the entire MLS, this covers about 80% of Washington state. And so you kind of get to see a whole trend here for the state. So the median price, for a majority of Washington state is up 3.3% month on month when you compare March of 25 to March of 2024. The average price is up 2.8. Another way to think about that is, the majority of the state is showing rising prices right now. Let's look at new listings and see where that one's going. New listings up 17% when you compare last year. Homes for sale up 25%. What's really funny though, if you just drag this out more, I mean, look how low we are. Let's look at pending sales. Pending sales right now for the entire MLS in March of 2025 was 7,570. And that number is, I mean, that's basically where we were in about 2012. So rates really matter here in the market. This is showing you that rates matter so significantly that we have these lock-in sellers who've got their 3% mortgage, their 4% mortgage, who just aren't willing to sell. So we're not seeing that transaction volume. So as rates come down, realize investors, transaction volume will pick up. Buyers, transaction volume will pick up. Sellers, transaction volume will pick up. It just depends on what side of the coin that you're on to see how you're looking at this data. Look at this. The whole MLS is only at 2.8 months. So basically, the majority of Washington state is at 2.8 months worth of inventory. The percent of original list price, let's look at the average on it. I think I confused it. I pressed too many buttons. It's about 98. This was the bidding wars of 2022, of 2021. Once again, there's 100 right there in the middle. So, in conclusion, let me drop this thing out of there. In conclusion, 1, rates are volatile right now because of tariffs. 2, the market has already started showing its appreciation. 3, we are in a transaction-based recession, not a price recession. As I just showed you, you can see that we're selling about the same amount of homes we did in 2012. We're really missing that move-up buyer who's usually going to sell their home and move into the next one. The reason we're missing that move up, of course, is the lock-in effect. A lot of people couldn't afford their same home today with the interest rates today at approximately 7%. Buyers, most of the appreciation in the Seattle metro happens by June. Sellers, that also means if you're going to do it, get while the getting's good. The problem with tariffs is it becomes this unknown factor on how much it could hurt the economy or how much the economy is slowing down. We don't know that. We do know the economy is slowing down because you can see it in the data right now. And you see it in jobless claims, in the jobless rate, in the producer price index, in manufacturing and imports and commodities. You see it in all these things. Why? The Trump administration right now, whether you agree or don't agree with them, this is just facts. They're trying to get us away from government spending, to lower that total amount of government spending. They're trying to stop the deficit or lower the deficit. And that's part of the reason that the 10-year Treasury is behaving so poorly right now. And I think most consumers miss this. The 10-year Treasury is behaving poorly because we have too much government debt and too much spending. We have to get this under control because we are a consumer-based economy. If we don't get this under control, you and I will not be able to enjoy the cheap debt that we've always enjoyed. If treasuries stay high, that 10-year Treasury affects credit cards, affects auto loans, it affects HELOCs, it affects 30-year fixed mortgages, it affects business loans, business lines of credit, commercial debt. They have to get this under control, but that's going to create pain. And investors, one thing I want to give to you is that people have been asking me, like, what should I buy right now? And there's two things I want you to think about as an investor, because if you don't know, I love being an investor. I am a land developer. We love building stuff, real estate investing. That's my jam. If a deal works today with high interest rates today, and it makes sense, as rates come down, that deal will just get better. That's the first point I want you to be thinking about as an investor. So you're going to have to go write probably a lot of offers. You're going to have to make offers. You're going to have to go hunting off the market. You're going to have to create unique opportunities. You're going to have to find seller financing. We've gotten more seller financing in the last 2 years than I have in the last decade. It's in vogue again. People don't love banks or trust banks like they used to. And with that massive drop in the stock market that we just saw, people are more likely to do that. And as rates come down and they can't get, an easy 4.5 from a CD, a money market, or a treasury, that option will become more attractive two. Second, I was asked, what is the best thing to invest in Washington State right now? So in the Seattle Metro, in Washington State, I think this is the best thing right now. It is the DADU play, the ADU play. ADU stands for accessory dwelling unit. Generally speaking, that means it's attached to the primary house. DADU, detached accessory dwelling unit. We're doing those right now in Lake Stevens, in Everett, in Snohomish County, in Marysville, in Bothell. And it's a phenomenal play because if you can purchase the property below market or even at market value, you can then create a lift by building that second unit. That doesn't work everywhere in Washington State yet, but if you want to go read about it, it's House Bill 1337. And House Bill 1337 is the ADU DADU bill. Go check it out. This is one of those things that's going to make an unbelievable amount of money. I'm Anton Stetner. I live here in the Seattle Metro just with you. If this has been helpful, hit that magic subscribe button or drop a comment or a question. Love to chat with you guys. You can reach us also at resg.com. Thank you for your time and hanging out with me.